I think that I would want to move on and ask Chris his views. If he has a list of priorities in terms of how cross-border banking should take place or be regulated, what he thinks his wishes are with working with regulators and governments, what would he be putting forward? Chris has a bank in Zambia and also a bank in Uganda. So I hope he will pick his words very carefully. Chris Newson.
And thankfully a bank in 18 other African countries. So I think the context of my comments is exactly that, in the sense that we, as an institution, are represented in 20 countries in sub-Saharan Africa, and therefore the need to understand the complexities of what's described as cross-border banking, which shouldn't be confused with trade or anything else, or transferability of money. It's defined around a multi-jurisdictional bank, and therefore brings to bear the concept that I think was raised a little earlier by one of the governors around this home and host environment. And when I talk and ask the question, what are some of my wishes? Well, the reality is that every single one of the 20 countries we operate in has a different regulatory environment. And it's not to say that the principles underpinning it aren't similar, particularly this question of stability, this question of the responsibilities of all the regulators to ensure that the financial sectors in all of these countries are stable, are sustainable, and also have the ability to be economically active and drive some of the economic activity is fundamental. The reality is, though, that they're all on a different stage of that journey and maturity in terms of development. If you go across all of the jurisdictions that we operate in, you will find that certain of the countries are still on Basel I. Some of the countries are on Basel 1.5. Some of the countries are moving very rapidly towards Basel III. And the congruency of all of those is something that one can never expect to happen overnight. It's not going to happen. So there will always be differences between all of those jurisdictions. But it's very interesting when you start thinking about what are the advantages of having a multi-jurisdictional bank in your particular country, or effectively managing or owning a multi-jurisdictional bank. And it starts coming to clients, it starts coming to efficiencies of cost. So if you are going to start benefiting from a client base, particularly more on the corporate side, where they themselves are multi-jurisdictional, and you're trying to follow those clients or help facilitate those clients getting involved in new countries and new businesses in different areas, the ability to start leveraging off that is sometimes inhibited or enabled by the particular country in which you're trying to get to, and the environment that it's particularly operating in. Secondly, the question of the role of banks in economies and countries, the question of the fact of penetration and the opportunity that exists, and the obligation, frankly, on all of us in the financial sector to keep deepening the penetration of banking into many of these countries. Also talks to the question of cost and the efficiency that one derives from banking and that one can derive. And all of that is around scale. And certainly one of the challenges I think we all have coming at us is trying to find the balance between the need for countries and regulators and governments to manage their particular border, their particular requirements in terms of in-country requirements, and try and juxtapose that with the ability to effectively scale and to leverage off experiences and infrastructure that are not necessarily within those borders. What do I mean by this? So a practical example. So where does a bank end up processing its transactions? Does it end up processing its transactions in 20 countries, for example? Or can it start thinking about a hubbing principle where it might have a particular hub in Nairobi, by way of example, and it does all of the East African transactions through that particular hub in Nairobi? The challenge to the regulators in many of these countries will then be, well, actually you're not processing, the data's not stored, The infrastructure and the IT expertise is not sitting necessarily within our borders. And how do we feel about that? What is the reaction we would have to that as a regulator? And our two gentlemen on my panel spend their lives trying to think about that challenge, and something which, as an operator, if you like, in those countries, is certainly something that I think we all have to really understand the challenge going forward in getting that balance right. But there has to be a balance, because ultimately otherwise the ability to keep driving down the cost of banking and the cost of doing transactions is something that we are all going to face very significantly. On a similar theme, I guess the other question of a much broader localization, I think, again, it links a little bit into the capital issues and the capital regimes that are different across all the different countries, but also the need to then ensure skills development, transferability of skills, ability to be mobile in the context of people being able to move between countries is something that is not always, if you like, the same in different jurisdictions, and in some areas tougher than others. And again, the ability to have a facilitating environment around that, I think, makes a huge amount of sense, and something which we certainly would want to keep trying to articulate to our various stakeholders to try and get right, because I think there is an ability to learn from each other, and frankly, there's a need to learn from each other in what we do. I want to come back a little bit to the regulation, because in terms of an observation, and the first is that I think it's undoubted to me, if I reflect back over the last 5 years, the levels of interaction and information sharing and experience sharing amongst our regulators across regions, so if you talk West Africa, East Africa, Southern and Central Africa, and across Africa per se, I think has increased enormously. And I really do think that's a very positive trend, and something that certainly we as an institution hugely encourage. In fact, we sponsor at least an annual get-together of all central bankers in a particular jurisdiction to help with that process, because I think this whole host and home principle will be hugely facilitated when people understand where each other are heading, and try and get to a point of congruency and information sharing across all of the governments and the regulators is very important. The last point I want to make, sorry, Albert, without taking up too much time, is a much broader point in terms of a kind of wish list, and that is that if I reflect on doing business in Africa, and I reflect on the challenges and often asked, why is it hard? Why are the margins bigger? All these sort of things. Actually, it comes down to one single point for me, and that is the need to establish strong institutions. If you think of the cost of lending, the cost of credit in many of the jurisdictions, a lot of that cost is attributable to the fact that there aren't good credit bureaus, by way of example. There isn't good data sharing. There isn't good information on consumer spending, etc. When you think of the challenges and the cost of trying to do some of the infrastructure projects that we spent much of today talking about, a huge amount of that is how do you execute on the opportunity, and how do these projects become going from the bankability stage to the execution stage. And all of that reduces the cost of borrowing, all of that reduces the cost of credit as we go forward. The sustainability of much of the growth that we are looking to help facilitate and looking to participate in is going to be subject to the establishment of really strong institutions. And we've got many examples where that is starting to happen. You've got many examples of where that's been a real success. And I think the key is to give momentum and further momentum to that. I'll stop there, Albert, if you don't mind.
Thank you very much, Chris. I think Chris, being one of us, when I say one of us, I also belong to the buy side. I have actually spoken for us. He talks about congruence of regulation. Cross-border banking really means that we need to get the regulators on an even keel. Today, it's not the case, as he rightly points out. He talks about the need for strong institutions. I think I do share that, being an operator myself. He talks of scale, costs, and the fact that localization, as opposed to having hubs, which is true because the regulators sometimes we want to see the servers in their country. And we think that sometimes there's a way of processing that makes it cheaper.
Doing business in Africa, you can't afford to be without Africa Investor.